It's going to be a long day, maybe a long week. Already the markets have moved from some rather deep losses to a far more mixed picture as investors try and digest a closer than forecast US election. Trump followed up his surprise Florida win with a speech designed to undermine the integrity of the race itself, urging more votes to be counted in Arizona, a state that was called against him minutes later, while calling for the results to be announced in the key state of Pennsylvania, where he currently leads with a lot of the vote left to count. Joe Biden's victory in Arizona and then Maine helped calm the markets after an initially rough open. However, they're still in a very different mood than they were on yesterday. On Tuesday, investors were acting like a Biden win was a foregone conclusion, with a blue wave set to deliver a huge stimulus package. Now the Democrats are unlikely to take the Senate, and with many UK bookmakers have Trump odds on to win the election. Spreadix is offering the incumbent at 1-2, with the challenger at 7-5, flipping from where they were this time 24 hours ago. And with two major counties in Pennsylvania reporting their last updates of the evening, the markets are facing a session filled with uncertainty as to who will be the next president of the United States. What's going to be interesting is how the markets react if Biden does win, but without a blue Senate, hampering his ability to deliver the kind of stimulus investors were banking on. Similarly, what would the Trump victory mean for traders? It would potentially see a relief bill passed a lot quicker, but likely in a smaller form than the kind of deal the Democrats would have produced. Then again, you can't ever really tell with Trump. He's promised, massive stimulus if he does win over the last couple of weeks. Whether that would get anywhere near the $2.2 trillion the Democrats initially wanted when they were trying to get a deal done before the election remains to be seen. But it wouldn't necessarily be a complete shock if Trump was to push through a stimulus package far greater than the more conservative Republicans would actually want. If, and it is a colossal if, the markets can pull themselves away from the results of the election, which could, worst case scenario, run on for days yet, there are a couple of major things investors can latch onto. On Thursday night, there was the latest Fed statement, which, given the proximity to the election, could be incredibly quiet. However, Jerome Powell and his FOMC pals are almost guaranteed to once again beat the drum for further fiscal stimulus, which obviously remains up in the air dependent on how the election actually shakes out. Then on Friday's the non-farm jobs report for October. The headline figure is set to fall from 661,000 to 600,000 month on month, continuing the reversal from the 7-digit readings seen across the summer. That is, however, set to be accompanied by a drop in the unemployment rate from 7.9% to 7.6%. Wage growth, meanwhile, is expected to nudge up from 0.1% to 0.2% month on month. But, as mentioned, the Fed, the non-farm data, and anything else that may crop up won't mean much until the US election is over and done with. The key state remains Pennsylvania. That seems to be in most forecasts where either man will cross the 270 electoral college votes, given that that state carries 20 electoral college votes. Though the results in places like Wisconsin, Michigan, and places like Georgia could potentially tip it either way, meaning, say, for example, Biden wouldn't necessarily need to win Pennsylvania if he did indeed take those other states.